Oh, we're here.
Oh, we're here. There we go.
Hi guys, it's Jennifer Ho. It's Real Estate Chat. It's 100 episode. I can't believe I am so excited. You know what it is? It makes a big difference if you really love what you're doing. So before anything else, I want to say thank you to all of you. I had a totally different plan for my 100 episode, but when you guys, hi, thanks for joining. When you guys found out it was a 100 episode, apparently someone started all these different people messaging me and said, can we have a special request? Can we have a special request? So believe it or not, Jamie and Suzanne had the most requests of bringing them back because apparently they are, I have to say it's true though. The interviews I had with you both have been the most memorable, that to this day I still have people commenting on, oh, I love your show. Remember this? Like, it's funny because like sometimes they don't remember your name, but they remember the topic. So before we go any further, I'm going to have these two amazing ladies introduce themselves. Let's start with Jamie.
Hey all, glad to see you again. It's Jamie Tyndall and I work for LoanDepot and I'm a mortgage banker. Been in the business for over 25 years and here to help you get in your home.
Great. Suzanne Malloy, now with Malloy Insurance. Been in the insurance industry for more than 25 years.
Yeah, exactly. Plus.
Started when I was 3. Only kidding. But we're here to make, actually I think my job is to help translate and to realize the value of an insurance and how it relates to you and what makes it critically important to have you protected the right way.
Okay, sure. Jumping quickly, we're both risk advisors. We are trying to mitigate your risk. That's what I look at, and help you with your investment, which Jennifer is selling you your investment, so to speak.
And it's a team sport.
Yeah.
It really is. She's absolutely right. Because the thing is, if you think about it, buying a home, you need more. I did one episode one time, and I did a recording where you need more than one. You need more than one person. People think if you're buying a home, all you need is a real estate person or lender. It's not really how it works. Because, like, yes, you need a lender, you had an insurance person, you need an attorney. Sometimes you even need a financial advisor or an accountant. So, you know, when I started with this show 2 years ago, I can't believe it's 2 years. The reason I wanted to do this is, like, there's a lot of buyers and sellers who have all these questions, and they just really don't know whom to reach out to. And the thing is, like, you know, if people would ask me mortgage questions and I would say, I'm sorry, like I could answer all your questions when it comes to buying a home, but I prefer to have someone who is a lender to speak for, you know, whatever questions you have. And the thing is, like, I've had so many people giving advices on something they don't really know. I thought, you know what, why not do this? So, hi Glenn. Thank you guys for joining. Okay, so yeah, I know.
I'm like, you can see, I can't see that far. I'm like,
I see Matthew there.
Hi, Matthew.
Okay. Yeah, I'd have to pull out the glasses.
I know. I have to go look.
Yeah, see, the glasses might come out.
Okay, so I'm gonna have a couple of questions for both of you. So I'm gonna start with Suzanne because you just started. You now just started with Malloy Insurance.
So my journey has been, I actually started at Malloy, and then I left and I owned an Allstate franchise for 25 years. And I've now rejoined back with Malloy Insurance, which has been in operation in Stamford since 1945. Wow. So 3rd generation, and I love it. And they're different systems, okay? So in the captive system, which is what Allstate is, or Geico, or any of those brand name leaders, you can do only what they represent. Right?
Yes.
And it's great in many ways, but I have found that my niche market is people who don't fit the cookie cutter, if I can use that word that way. We are coastal. We have a lot of homes near the coast. Allstate's not going to do it. Other places might not do it. And Nick gave me the opportunity to have a wider range of people to work with and places to place risks and things like that. If somebody has a dog on our hot dog list.
Hot dog list.
The Kiwis, Crescent Canarios, you know, those dogs, Dobermans, then we need to find a different marketplace that is not your possible standard traditional marketplace. So I'm super excited about it. I'm working with my brother Matthew, my father, We have an amazing team there as well. Grateful for many years with Allstate. They're an amazing company as well. It just chose for me to go here. We were just talking about earlier, different products, travel insurance, right? Things I can come up with. So
that's the thing. So I had to research, okay, what is all of, and then I saw travel insurance. Wait, you do travel insurance? I didn't even know people still do travel insurance, because normally I assume if you buy a ticket, it's already part of what you're paying. And the thing is, when you go to college, you get the tuition insurance and everything. So we're going to talk about the travel insurance and all the other products that you do. Now with you, lending, it's been, a lot of people, we talked about this last time, is that with interest rates going up, it's hard to find a home now and everything. Now, is there anything since we last saw you that has been interesting when it comes to the lending world?
Not necessarily interesting. I think that people are more understanding that rates are high than they're used to seeing. That's the way it is. And home prices are softening in certain areas. So in the days when you were maybe getting into a bidding war, there are some areas that you still are. There are others that you're not. So sometimes if you say, I keep getting shut out of a certain area, maybe if you expand your radius.
Yes.
Now, if you can do that, that's great. I had a flush this week. It was funny. A serious amount for me, a number of 10 people who were like, we've got home. I'm like, what? Because they expanded a little bit. 2 were over asked, but the rest were actually under. In the Greenwich, I'm saying on too much. In the Greenwich area, you're probably not going to see that.
Yeah.
Stanford, in certain areas, $1 million and under, you probably aren't, because that's a niche that everyone's looking at. But you also have to just understand, how much do you want versus how much do you need?
Yeah.
And I think that now, before people, when rates were so low, there wasn't a separation of want and need, or it was one thing and you just did whatever. Now if you can focus on what do you need, and then maybe some wants, and then that can help you if you need to maybe lower your price range, because I can't lower a rate other than we can do buy downs in rates, which that's temporary or permanent to get you to a lower number. But coupling maybe a buy down, you want need, you can get in the home.
Well, that's the thing. It's I still have people who need to buy homes, and the problem is, I have a client from New York City who had a certain budget. With the stock market going down again, he just okay, I just lost so much of my money that my budget has now gone down. And one of the things I did mention to him, as you said, well, you've only focused on Riverside, Old Greenwich. Why don't you open it to Costco in Greenwich? It's still Greenwich. It's just different areas. And he says oh, never thought of it that way.
And
then what he found out is oh, there's actually more selection now that because I told him, your kid is 2 years old. You're not going to be considering schools for another 3 years. Why limit your options? And then there was an aha moment just considering.
Well, the other aha moment too there for anyone who's listening is, if you are very seriously you need to buy a home. You're living in a 1-bedroom apartment or a studio or whatever, and now you have 2 or 3 kids that are getting older and you need to move because it's too small. If all your investments are in stocks, and not even necessarily volatile, but in things that can fluctuate, you might want to take a portion and put in cash or CDs that are now paying 5 to 8%.
True.
And that is not going to change. So that down payment number you have, versus if you have volatility in your portfolio, you've taken that away.
So we just had, I was just with one of my colleagues in town hall discussing about certain changes, in some of the zonings and stuff. Your insurance. Now, flood zones, I know in Florida, for example, you can't even get a flood insurance. You can't even get an insurance for some reason. Now, is that something that we are having a problem here in Connecticut? Bless you.
So, first of all, flooding. Technically everybody's in a flood zone.
Yeah.
Everybody. It's managed
Yes.
inundation of 2 or more acres or 2 more properties. And in fact, 60% of all flood losses are outside of the flood zone.
Oh.
60% are outside the flood zone. Keep that in mind, right? So
This is what I love her.
so if you're in now what people typically refer to as the flood zone, it is where it's mandated insurance.
Yeah.
Okay? If you have a mortgage, it is mandated insurance. If you're in a zone that doesn't require flood insurance, your flood insurance is very cheap. You're talking it could be as little as $300, $400, $500 a year. Now, if you're in a flood zone, my home's in a flood zone. I'm mandated insurance. You can get it. We have private markets that can be less expensive than the National Flood Program, NIFP. And the other thing to note, which is very interesting, and I think it's the only policy that I'm aware of where it actually stays with the property.
Oh.
So if you have John Client who's selling his house and it's got a good grandfathered NIFP policy, we can take that over and stay with, it's Johnny Seller and Susie Buyer, right? We're putting together. That policy can stay there and they get that same rate. Now, it's a big one.
I tell all my flood, like in flood zone mandate, I go, please see if your seller if you can transfer, price both to whatever you feel comfortable with. But if they can transfer it, check that out. If you like the policy,
and if you can get
supplemental,
right? Because sometimes you have to realize some of these people who had a mortgage paid off, or with the remapping, they're now in a zone they didn't know it. Then you're starting at a higher rate because it's grandfathered policies, 100%.
So we were talking also. What was interesting because we were talking about. Sorry, it's like. I was just talking to a client that owned a property in Florida. That's why Florida is in my head right now. When Ian, when they had the hurricane, they said that they didn't have the insurance, but actually it's not. If only 60% is like on a flood zone, so does that mean if I'm not in a flood zone, should I get a flood insurance or anything flood related? For God forbid that. Extra rain that we've had and everyone started having flooding?
The answer to that can be yes. It's not necessarily. Listen, you can insure up the wazoo if you want and be overinsured. And you have to do a risk analysis for yourself, right? If you don't have a lot in your basement, perhaps, maybe you just don't have anything down there, it's a 6 to 1, half dozen the other. But if you have a beautiful finished basement and you want to have something, you should either look at water backup coverage, okay, some pump overflow, those things. Not all policies offer them, you have to look for it, or potentially flood coverage. And, the standard NIFP, which is the National Flood Insurance Program, their maximum is $250,000 for the dwelling. So if your house gets knocked over by flood, your maximum is $250,000 to rebuild that house, and only $100,000 in contents. Now,
that's not a lot.
No, it's not a lot.
No,
That's what 99% of the people insure.
Yeah,
but that's what they insure. But I'd like to say, kudos to you because for flood. So you've heard my maybe flood story. So I am not in a flood zone here in Connecticut. Home's up on a hill. I do have flood insurance because over 25 plus years, I've talked to so many clients that have had
flood problems.
Issues that I'm like, my policy for $450 a year. Some people say you're risking it. Well, I'd rather waste over 10 years, $4,500, and I did have, it was sort of like a flood, like basement thing, but guess what? I didn't have to pay anything because it wasn't, and here's, Suzanne, you'll know this, I have a home in California, in the desert. There are no basements there. If there's heavy rain,
mudslide,
all the mudslide or all the rain has nowhere to go but in the house. So I have a policy there. I had a $45,000 claim.
In the desert.
In the desert. As my mom, who's living there, is filming, and there is water pouring in like from a skylight. It's like a rain shower, and then it looks like there's a tsunami, you know, haha, that high, but of like rolling water into the house. It did end up that the HOA, that actually ended up being responsible for paying that due to separate story. And the $45,000 loss was paid by them, but had that not happened, I also would have been protected.
That's correct.
For nothing, because I'm in the desert paying $300 a year.
Wow.
Right. And then a quick distinction, just so everybody's clear on flooding.
Yeah.
If it's like a pipe burst in the house, the washing machine hose went.
Yeah,
That is not what we're talking about
No.
for flooding. We're talking about groundwater coming into the house.
Natural
yeah. Right. Mass inundation of 2 or more properties or 2 or more acres. So if you're in a farm, 2 or more acres. Here, where we are in Fairfield County, most people are closer to neighbors than that.
Yeah.
It would be 2 or more pieces of property. And so, for example, rivers coming up. I mean, we've all seen it in New York City in the streets like that. By the way, if it's your car that gets flooded, that's under comprehensive coverage. I know we're on the homeowner side, but
yes,
you know.
See,
Suzanne
is seriously a one-stop
you're in a ranch
shop.
house or whatever, and here's your garage a little lower, and you're thinking, oh, whatever. Well, now your car.
Exactly.
Well, because
I mean,
I have clients who are renting, and insurance doesn't have to be only for homeowners. If you're a tenant, it would be good to have an insurance. So she was renting in an apartment building who wasn't not even underground, street parking. And then either the pipe burst in Sanford, for whatever reason, there was some massive rain where the whole parking lot basically was full of water. So they had a fancy Porsche, which is now underwater. Maybe it's all totaled, and there's no insurance
because they didn't have the proper insurance on the car.
So that's more of a car insurance.
And also, if they were in a condo, the condo is probably going to have something to do with the broken pipe. But let's let the insurance companies debate over who is like me, who's just visit me or you, and hopefully it's them. But
100%, you're absolutely right.
I'd rather have them deal with it versus you don't know this stuff. So why are you going? I'd rather have a professional advocating on my behalf than.
Well, and even you're talking about apartments, for example. I know a case where I've never done this, but fried Oreos, apparently it's a thing.
Okay.
And it splashed and caught on the microwave, caught on fire.
Oh, jeez.
Can you imagine the amount of smoke damage? So there was
an Oreo.
From an Oreo, right? So the kitchen.
After Halloween, guys, don't just any candy. Don't even the Tootsie Roll, something you're gonna dip. Just stop now. Stop. No fondue.
But the kitchen is one piece of it, right? The kitchen's one piece of it, but now think about it. Where does that smoke go?
Oh, you're right.
It's on the wall.
Everywhere. So not only did it have, it was probably about a $15,000 to $20,000 kitchen repair, but about $45,000 in total because of all the smoke damage. And you get it cleaned professionally.
Yeah.
No insurance. Have fun washing all those things yourself.
You can't. You really can't. Like smoke damage, it's hard to get rid of that smell.
Yeah.
Even like a cigarette smoke.
Well, and also, by the way, that might, especially in apartments, right?
Yeah.
So you're a little bit at risk of all of what your neighbors are doing, right? So if that Oreo fire happened at your neighbor's place and they didn't have insurance, we could go under their liability, but you might need the coverage yourself, and at least you can rely on your policy if they didn't have something. So just things to think about.
I'm never gonna look at Oreo the same.
No, not just all the Halloween candy. I'm just thinking of all the things, where you're like, oh, let me, oh, this is frozen, not frozen. I'm heating it. Like, what? You're frying it?
Well, the thing is, like, the reason for me Oreo is something's like, I have 4 different flavors of Oreos in my house right now because it's something that they're like, because there's a lot of limited edition right now.
I'm voting for the vanilla, the golden ones. I love.
Oh, right.
I'm now addicted to the golden Oreo.
Now they're hot cocoa, red velvet, cinnamon. Oh, yes.
Ooh.
Oh, there's a lot. That's why it is, right?
There's one that's like it's like a yellow, like a vanilla, the golden. That's
love it.
helps your teeth.
Okay. Now I have a follow-up question with you. Do you remember when we were talking about a parent, instead of the gift thing?
Yes.
Then we talked about having a parent co-signing a mortgage, and can you because someone was explaining, oh, my grandmother actually wants to start giving me money, but at the same time, can you explain more about having someone co-sign a mortgage with you?
Sure.
How does that work, and how does that help someone who is purchasing? Because especially now, funds are.
We were joking about getting the kids out of the house, the house, the basement, the shed, wherever you got them stowed. So if you have these are for conforming loans. So if you're in the jumbo arena, this does not work. If you're getting a jumbo loan, the person who is going to own or occupy, being, let's say, in this case, the child, has to qualify on their own. So this is a separate conversation.
And jumbos know what?
For Connecticut.
In Fairfield County, it's $750. In Westchester, New York, you can go up to $1,089,000.
Oh wow! Okay.
Is your limit above that? So above $750. Fairfield, $1,089,000, Westchester, and a lot of areas. So, and those numbers will $750 should be the number here in 2024. It's just now it's New York. The $1,089,000 will likely go up a bit. We don't have that number yet, but they do conforming. So okay.
No, that's
so you're doing
question.
A conforming loan. Okay, one of these numbers. Child, let's be. I like to use extreme examples because I think it drills in more. Your child doesn't even work, or they make a minimal salary, they're interning somewhere and they're making $18,000 a year. You would like to buy them, grandma, whoever would like to buy them, anyone who is not occupying. It can be a relative, it can be not a relative, whoever wants to co-sign can co-sign. Anyone can co-sign with this person because they would like to help. Whatever out of their benevolence is, they would like to help get the person into their own home. They can co-sign. Now you are 100% also responsible for that mortgage.
Yes.
So you have to remember, if you're co-signing and you just...
Yep, sorry.
And we're at... Bingo! Wait.
Thanks, Scott.
Yeah, that's awesome, Scott. Thank you. That's hilarious. So you're responsible. So if you now said, oh, have the person who lives there is just going to pay, I do say you want to make sure they're paying. Let's say if they didn't actually qualify, but there's some other way they're paying. If they don't pay, your credit will suffer. So you also need to be aware, whoever's on a mortgage, you maybe want to see monthly, use a separate account to make sure so you can look and see. Or if you're paying, now again, the person's in the home and that's it. And you want to, feel free to pay. That is totally up to you. So going back to the gifting question, sometimes clients, I just closed one on Monday, who the father, rather than gifting,
because there's tax implications.
Because you have tax implications and maxes, co-signed with his daughter. So non-occupant, she bought in Massachusetts, he lives in New York. He was putting down the down payment. Yeah. So he's putting that down. He owns that house. It's not a gift. So he just bought a home for himself. It doesn't matter. He just owns that home. They can work with their financial planner on who's taking deductions. By the way, you can also choose who takes the deductions. So now, does he want to take the deduction? Is the daughter? They both own the home. You don't have to do it 50-50. They can go after that. But again, he did that because he's avoiding, based on not avoiding. It's useful. It's just not quite doing the tax thing.
He's leveraging it.
He's leveraging, so that worked for him to say hi, and it was a good $250,000 for a down payment. Yeah. And in this case, his daughter can afford the mortgage, so she'll be paying it. But it's just a way to facilitate a purchase and gifting, and how are we going to do that, and taxes and estates, and how it is now.
And the thing is, what's important here is that, because remember in my taxi, I was in an Uber, and the guy basically told me that he co-signed a mortgage for a best friend,
just because, like without being, let's say, informed. Like if someone called me and said that, I would say, you do know this. In this case, he was like, I didn't know the things I just said. Like, you're responsible. Or now, let's say the taxi driver now wants to buy a house of his own.
He can't.
Well, he couldn't afford his own house. In this case, my person who's the father, is wealthier, if he wants to buy a house somewhere else, he's not worried about it. But you need to
Well,
you're 100%
you need the color. You need the color.
But the thing is, like, the worst part about that story is that his name was not even in the deed.
Oh yeah, he's 100% technically liable, even though it is two people 50-50, but 100% doesn't even own the home at all.
They could sell that out from underneath and it's still not.
Well, that was happening because the lender now, hey, do you want to refinance? Because interest rates are at, like, you're basically the house that you purchased have now made money. You want to get money. It's like, stop.
Yeah, the guy was going to pay cash out and get a higher mortgage.
Which this guy could just so anyway, so that the reason I bring that up,
you're in your dance with.
Yeah, exactly. So the reason I bring that up is, if you are gonna co-sign any mortgage, can you at least make sure that your name is on the deed?
On the deed, and if it's not, and I say this also for husbands and wives too, and sometimes you don't want it on. Here's a reason why if you're not on the mortgage, okay, husband, wife, you both work. You both make the same money. You qualify with just one income. If you're now going to say we might want to buy a second home, but somehow one person has more debt, you might say, Jennifer, you do this home, and we know our goal is in 2 years, we're going to do a home in whatever, Florida, Maine, wherever, second home, and I'll do that one because I'm not responsible for that debt. Yeah. So sometimes also I'm talking about, let's plan ahead. It's not about, oh, you're not responsible or, and I go, by the way, guys, if you're doing that and there's some other question of, well, now you own the home and you can still be on the title, or, well, if I own the home, I don't own the title, talk to your attorney.
Yes.
For issues of whatever.
You can be on the deed, quick claim onto the deed.
You can be on the deed, but if the person really says don't be on the deed, you could in some type of other legal transaction, so you're not suddenly she is owning the home and saying this is mine, not yours. Let's because we're not a community property state.
Exactly. Like that. Absolutely. And then also, by the way, for insurance purposes, if you are getting money, right? So they put $250,000 down. You might also want them to be listed on the insurance.
They have to. They have to be.
Because if there's a claim, it's just like your mortgage company. Your mortgage company is going to get their money first.
Yes.
Now, a small claim, a bathroom repair, it's probably not going to be a big deal. But if that house is burned 50%, you better believe that mortgage company is not going to release until they see the plans and know what's going on.
Right.
Because they need to make sure that they're whole. They want you to get back there. Nobody wants an undeveloped piece of property with half a building on it. They want you to develop it right away. They want you to be.
We don't want you to have no bathroom. Okay, that's something happened. The fire, the Oreo thing. We don't want you to not have the bathroom because it's smoky. But
no, but they're big enough numbers. They're going to make sure that everybody's involved with what's going in alignment
and knows what happens. So if you do have a mortgage and there are two people on the if you're both on the contract, you have to be on the mortgagee clause for the insurance policy. Yep. Some people, it's funny because I'd say 99% of the time, Jennifer calls us in and it's like, oh, hi, I'm on this, and then I get it from you, and then I call you back and go, you gotta add.
Yep.
So-and-so, and it's not that they're trying to hide something. Why would you know? And you wouldn't know. Even if you say there's someone else, they're not lying to you when they say, no, just forgot this.
Well, it's true though. Dad helped out.
It was it's okay. They weren't because, or you say, are they on something? I have no idea. That's why you have professionals to just say.
Oh. Well, it's like most of the time, like if you haven't, look, when I've owned my house for over 20 years, and I've had the same insurance company. This was before, like, I even met Suzanne, and it's like half the time you don't even remember anything, let alone the policy number. Oh. You just have that one person. And like that one person you call them changed 3 times for you, but it's still the same number. So, it's one of those things.
Or they just keep upping something, like, I'm divorced. Well, I changed it, but, if you just kept saying paying and paying, and, at that time you're making changes, but you could just have someone on by the way, if someone's on an insurance policy, that's not for your home. But, you don't want to then have a claim and have to locate your ex-husband to sign off on something, too.
Yeah.
Because if you've got a claim and you get a check, everyone has to sign.
Exactly.
So we don't want to hunt down someone if it's not needed.
And that's why I think it's important, you know, you buy a house or sell a house every so often, and you go through the house and you clean it up and you get it organized and you put it to market, but you really pay attention to what the house is all about right then, right?
Yes.
At the same time as a mortgage, and now let's pretend interest rates are going down or up, whatever. Your situation changes. But you're gonna reevaluate what's going on. So often people don't look at the insurance policies because they just go plug and play. And I highly recommend every probably 2 years or so to look at it. There's little things that you can tweak sometimes. A $500 deductible, bring it up to $1,000, you might save $200 or $300 a year.
Yeah.
Liabilities. Let's look at those. Go ahead.
I have a great story. I wish I had you done for these clients. So I'm refinancing these clients, and I'm like, "What's your insurance?" They're like, "Oh, we don't know." But so I plug in a number, generally insurances are the same if there haven't been a ton of claims on certain houses. So I'm figuring, oh, your insurance is probably like $5,000, $7,000 a year. Okay. They give me a policy, and their insurance is $45,000 a year.
What?
And I'm like this. Did you guys have, and I mean, I'm asking things like,
and I thought mine was bad.
Okay, so I'm thinking, have they had, is there something like disasters? No. I now send them to like a new policy, $5,000 a year.
Yeah.
Like, so they go, so let's understand, they've lived there 10 years. So $400,000 that they're like, I was like,
that's
I don't know what, and by the way,
somewhere.
it wasn't even, or it was like not even, it was like, what is, I couldn't even speak, because I'm like, I'm not an insurance person, but I'm just looking just at this number. I'm not looking at like, is there something in the house that's special that I don't know about?
And there could have been.
There could have been, like I said,
like a Picasso.
well, there could have been artwork, but this
Yeah.
was just for the house. This wasn't about contents. This wasn't like, this was like your insurance for the house flows over, your house is worth whatever. Not, oh, and yes, we have the Picasso. That's your separate. You would have been, like, we don't talk hero status of the person who, like, I was like, well, there was,
but that does happen.
Because and it happens because you just go, oh, or maybe at the time when they took it, there was a reason for that. We
I was
don't
going
know.
to say, right.
And we don't need to dig back to say, well, or they don't remember why. Maybe there was something with credits
could
or
have been
something.
Art collections, it could have been, sometimes people have a significant amount of jewelry that they want to schedule on the policies.
But again,
those all go into the number.
But again, we also, for home insurance, just here's a tip and trick, because that all goes into the number. If it's making you not qualify, we say we're not looking at all those other schedules. So we will, if we have to, I mean, usually we're just doing it all, but if we have to pull out all those schedules and just say, literally, your home is going to blow down, what is that? The contents of jewelry, that's not what I'm looking at.
So that's good.
That's
to help
a tip
you
and
guys.
trick.
Yeah.
If again, typically we're escrowing, meaning you're paying your insurance with, auto is separate, but your home insurance is just that. But if you've got, you're married, maybe you have some jewelry or whatever. You're not married, you have your jewelry, whatever. There's a piece of art. That is a separate schedule. So you can separate that out and pay that separately. And so again, we can tweak if we need to.
100%. And by the way, you can endorse policies after the fact. So just like you're talking about. So if you have a homeowner's policy, qualifying goes into the monthly nugget that you're going to be able to pay, right? And we're in a higher interest rate environment. So perhaps you do have that wedding ring you want to have on there, the engagement ring, whatever it might be. But they're looking for the base policy, correct?
Yes.
And so
of the house.
Of the house.
What does it cost to replace the house? Not your jewelry, your house.
And
then I would definitely, then endorse it the next day to have the things, the bells and whistles that you truly need. So don't be confused that you're only getting this one piece. Make sure you are properly insured. Yeah, but there are ways to lever it.
Right, of like liability, excess liability, all that. But that could be separate than what we just need to rebuild your house for the mortgage.
And high deductibles usually. They don't mind a $2,500 deductible.
We're fine. I think we go up to like five or 10. I think 10 might be the maximum. I think it's 10. Some are 5, but it's 10.
Trade-off stops at about $2,500. But still.
Yeah, I mean, some people want 10,000, and I'm like, well, by the way, if you're saving $200 a year, but do you really want to pay 10 grand? Like, you'd probably go to 5 and pay.
You're right. 100%
I don't know.
right.
Again,
but everybody's different.
So the reason these two ladies next to me is very important in purchasing a house. a lot of you, before you purchase a house, a lot of people just think, oh, how much mortgage am I going to pay? But one thing you don't realize, one of the other payments you have to factor in is the home insurance, because you cannot get a mortgage without a home insurance, because it has to be there. And even in renting, you have to also pay a rental, an insurance. So that's why I have two amazing ladies here. Now the question is like, when someone comes to you, this is the question I've been getting. Should I get the insurance before I buy the house? Should I get like after? I was like, no, why don't you talk to an insurance person now, at least to have an idea before you buy a house? Right?
100%.
So
years.
Some people like, oh, I'm moving tomorrow. I don't have an insurance.
Well, so like if they don't have if you are not getting a mortgage, you don't need insurance. Okay.
To show them, but you still need an insurance.
But by the way, if your whole house, but also, if you know you're looking in a price range, why don't you call Suzanne and find out what is that going to cost me? Yes. Because if based on your credit.
Well, 100%. So your insurance score will be part of it. But now here's a doozy that people don't realize. Bingo.
I love
claims on the house.
Claims on the house. You might be wonderful, but.
Yes, claims on the house. So there's a thing called Clue. Some companies call it differently, but years ago people would say, oh no, I never had an accident, I never had a claim, and they would all lie, of course. But now, with technology, the information's being shared. So please don't come at the 11th hour and then had 2 water claims on the house in the last 3 years. I mean, we had one person.
For people who don't know what claims on the house, what does that mean?
So, for example, we had somebody come in and they're getting their insurance for a house that they're purchasing. And going through the whole process of looking for the insurance, we get this Clue report back. There have been 2 claims for over $40,000 each.
Wow.
Each related
on
to
the
water.
house.
So your insurance. So you think your insurance is going to cost X, but it won't.
And in fact, you will be very limited in the markets that you can get.
I remember
and then the sad story on this particular one was not my client, but a sad story on this particular one. The new homeowners people ended up with another $40,000 claim as a pipe burst.
What?
Mm-hmm.
That is like
a
trifecta bad.
Trifecta,
like what? Like
so the point being is that
that would be a red
alert. I was just like
that would be a red flag for me if I'm representing like.
Well, no, I would say what were the.
Why wouldn't you?
But but that's also on the house. Why? Okay, you signed your contract. Now, so you identified your property, 123 Main Street. Now you're calling. Now you do find out there were claims. Now you can see also what they were. So maybe this would make you not. Typically, it would. Hey, if there was the Oreo situation, hey,
that's a one-off.
That's not the one-off. That's a one-off. But if it's like it seems like something keeps going on, or is that showing you the pipes keep bursting? Well, what's going on there?
So the thing is, like for me, okay, a claims, but that doesn't. That's for the homeowner. Is there like, what do you mean? Is there like a lien on the property for those 40,000?
Generally not.
No.
So basically, because there's been 2 claims, 40,000 each on. So basically, the reason we would need to know, because now if I'm not the one who did the claims, that would still affect me as fine.
It's a property.
I did not know that it's attached to the property.
Right, because the property
has
is
issues.
Think of it. I think of it like this. You have a car. And you rear-end someone. It's not a disaster or anything. You don't want to necessarily claim that with your insurance as an accident. Your policy is going to go up, or you can say like, let's just get it fixed and say it was like off the books, because when you do that Carfax, just like Clue, it's telling you what's going on. And
100%.
It's a similar concept for people who are not homeowners. A lot own a car.
So now I'm curious. So did the buyer actually ended up getting an insurance?
They did, but they paid higher premium for it because of there was within 3 years there was 2 claims of over $40,000 each.
And they never fixed the problem. See,
well, it's not. They did fit. It's like my $45,000 a year. I thought maybe they had, because they did live near the water, so I thought, has there been massive flood like from a hurricane, you know, the whatever, the superstorm Sandy and all? I thought maybe that's the reason. Nope.
But also, okay, so markets change. Yeah. They absolutely change. Appetites change. Just like with the mortgage companies, the risks that people are willing to take, credit score, you know, when times are good, their interest rates are low, maybe they'll be able to, you know, take it a little bit. Everybody has their niche markets they'll take, and we're in a pretty hard insurance market.
Mortgage insurance?
Well, mortgage insurance actually technically is life insurance.
Is that for me? Mortgage insurance?
Actual mortgage insurance is PMI is me.
Is her.
Insurance as in if you
lose your job, then you can't pay.
That's a separate insurance.
So that's you?
It could be. It's disability. Well, no, it depends.
There is an actual different insurance, which I think is sort of scammy, but I have not fully looked into. So I would overall be like,
A lot of people are talking about mortgage insurance. Not within the mortgage, but you buy your house, you get tons of literature. It's like buy mortgage insurance, buy mortgage insurance. A true mortgage insurance policy is going to pay off your mortgage in the untimely.
Yes,
if you have an untimely death.
So
you become disabled, or
we could do life insurance. Definitely, we could do that.
Yeah,
but even in that, if you buy it from ABC mailer that comes in, often they are going to give you enough to pay the mortgage. So you got a $1 million mortgage now. In 30 years, it's worth $100,000. They're only going to pay that $100,000. Most people are better off buying a term policy. Which will be that 30 years at $1 million. So you've already paid off. Wow, your family's now going to get $900,000.
At least paid for.
Or even better than that, not everybody wants to pay off the mortgage. It's talked about cash flow. So are you better off taking that $1 million?
Yeah. Or
and it gives you the option to make the decision. It's not being made for you.
Yeah.
So just things to consider in there.
This is exciting. We're like,
I know we're all sort of like geeky or whatever, dorky, and are like we're also into it. Like, oh my God, like this happens.
I actually want to ask you if this is true, because this happened to me. Back then, when Sandy happened and Katrina happened, all that, apparently in the state, I had AIG then. And the insurance totally dropped me without explanation whatsoever. And I didn't know back then. This is why knowing the right people in your life makes such a big difference. Hiring the right people. That's why, God, I wish I knew Suzanne back then.
I know, we're all like, wait a minute. I'm like, oh, my client would have been like.
No, because this is the thing. It may not be as extreme as paying $45,000 for an insurance. What I love about Suzanne is she looks at everything. She looks at, it's not just a number for her. She gets to know you as a client, and then, you know, figure out what's the best insurance that would work for you. I mean, I was paying, so what happened to me, so they dropped me because they never told me that, you know, they could drop you. And now I ended up with, I call it the black market of insurance. It's horrible. I was paying. It's like going to a loan. This is how I was explaining. It's like,
can you insure my
black market? Like it's like being like going to a loan shark because no one else would insure me. This is like
that's just funny the way you're saying
it. It is funny.
It's not funny, but the way you're saying it.
And the nerve is, you know how much I was paying? $16,000.
That should be
for insurance, like which should only be like $4,000 or $5,000. That's why I say it's a black market.
Yeah.
And
but it can be. Okay, so
that's the thing, and like people don't know that, and that's why it's like before you put in a claim, know that. And this is the thing. What happened to me with my last insurance? That's why I fired them at this point. Was you ask a question? What did the insurance broker do? File a claim. I wasn't filing a claim, but they wanted that to be on your record that you filed a claim. Yeah. So when you renew next year, oops, sorry. Even if you even if you didn't file it, even if you didn't get any claim, right? It's like the fact that you filed, that's what counts.
It can be, and so that's an advantage and disadvantage. You call the 1-800 number, they're going to record it as a claim, even if it's a zero payout, because you made a claim inquiry. Now, water, I tend to say put the claim in because water's a funny thing. You get mold, you get all that other kind of fun stuff. But if you have a small thing, you know, look at the benefit of it. If you're putting in a $4,000 claim, you got a $1,000 or $2,500 deductible, whatever number you chose, right? It's a number you chose. Then yes, you will. Everybody says, "Oh, I got a rate increase." It's true, but what you did is you lost your claim-free discount. Okay.
That's what.
So you've been getting your discount all along because you've been claim-free. You didn't get a rate increase because of the claim. You could on your second or third. You might end up getting a surcharge, but you want to outweigh what that increase is going to be over the next 2 to 3 or 4 years or 5 years. Usually it's 3 to 5 years. The first cutoff is 3 years. The second one would be 5 years. And what's the presence of the money on that? So the tree falls, it knocks off the gutter. There's no damage to the house. You've got to repair a couple of shingles, maybe a little bit on the siding. Take care of it. Wait for the big ones. Insurance is not meant to be a maintenance policy. It's designed to cover the big stuff. So keep that in mind. And you're talking about, your case, and I'm not saying, I don't know all the details on it. I could look it up.
It's like a tree in the gutter.
Yeah.
That's pretty much what it was.
Yeah, you were just trying to say if. Your concept was you were trying to say, well, if I did this, but she or he was actually
and the thing is that, and another thing is like, just to give you guys an idea, so insurance offers this now, like, those mechanical insurance, and when I really hated my old broker. So my question was, when I agreed to do them, they said, if you do claim, because it's mechanical, it doesn't apply as a claim. Well, apparently it did.
It's like on autos. If you have towing on your car, it's going to be towing coverage, and it's a claim on the policy. Yeah.
So it's just like, that's why it really makes a big difference when you hire someone. You really need to hire someone who really knows what they're doing. So that's why, as a real estate agent, I never would give you an advice on insurance or lending or anything like that, because that's why these two ladies are here. Because if you're basically, like for example, I was talking to someone, she was told, oh, well, the best way to win the bid is to let the seller stay and rent from you for like 6 months.
Oh, don't start around that.
Oh, and the thing is, like, so, because like this buyer came to me and said, hey, I have a question. I saw your show, but my agent was telling me to rent it like for 6 months, and I thought, oh, why not? I get an income. But then they got denied the mortgage, and they lost the house.
On that, just when you are buying a home as your primary residence, like you have to, by law have to move in within 60 days. So if in your contract it says, hi, I'm buying my house, I'm closing on December 1st, and Mary and Jane are going to be staying there for another 6 months, your home's now an investment property. So your home will have to be repriced as an investment property. Now, if I don't know anything about a lease back and it's not in a contract, I don't know anything about a lease back. But please remember that you did sign a piece of paper that said you're moving in within 60 days, and different attorneys have different feelings on, are we going to have a side agreement or something? And again, I don't want to know anything about this, but really you need to move in the house within 60 days. So if you wanted to lease back to Mary and Jane for 60 days, that's fine. Or 30 days or whatever, that's great. But the 6 month, you can do that, but again, you have to be applying for the right thing, or again, someone has to make sure they read your contract. A lot of mortgage...
Please read your contract.
But not even you. You gotta make sure your mortgage person does. We actually had a conversation about this recently, where, like, who doesn't read it? The first thing, the reason I will not lock any rate, will not, and other people do, well, whatever, I won't lock a rate, because I want to see the contract. Because if you assure me you're buying your home, you're closing on this date, well, are you? That's what you said, that's what you thought you agreed to, and then you sign the contract and all the dates are different, or there's something going on, or whatever. I don't want to have to be the buzzkill and say, oh, now I have to change your rate. Or now we have to do something different. Or, oh, wait, did you know you agreed to this?
I have a question then. In New York, in Westchester, the closing date isn't set in stone.
No, it is not.
So apparently in Westchester, and I found this out when I sold, I listed a house in Scarsdale.
But it's on our one.
Like, so basically when you say closing in 60 days, let's say you close, for example, November 30th, and the buyer basically, or the seller decides, you know what, I want to close 30 days later. So what happens to the buyer who has that,
So, great question. So in Connecticut and a lot of states, when your contract says we're closing November 30th, you have within like 4 days or so. And in Connecticut, honestly, you're closing on November 30th.
Yes.
Like it rarely even moves a day. Truly, like the day's a day. In New York, your contract says you will close on or about November 30th. Either party, buyer or seller, can move that date 30 days ahead with no harm or foul to either. So you can't say, I thought I was closing November 30th, you need to pay me for my rate lock extension, my moving costs, whatever. That 30 days is afloat. So what you want to do, what I make all my clients do, is say, truly, and in New York, the attorneys don't even look at like a calendar. See, like in Connecticut, they go, oh, it's November 30th, like a Friday, Saturday, and they would change it. New York, they just put November 30th. That's a Sunday.
Sunday.
Yeah, but they don't care, because then they go, oh, that meant December 1st, or that was really November 23rd, or whatever they're doing. So I always say, please ask. It usually is best to via your realtor, because they're speaking with the seller's realtor.
Yes.
Really so the two people. Hi, Jennifer. Okay, can you please talk to the seller's realtor and really get a feel, are these people really moving out on November 30th? Is their intent really like as close to November 30th as possible? Yes, they truly do plan to. Well, actually, they are going on a trip and it's going to be like December something. So now we've got step one of, we have a good feeling.
That it would be delayed.
A reasonable feeling that it is firm or delayed. Now, attorney. Hi. Mr. and Miss Attorney, do you plan on being here? Oh no, I'm going to be gone for whatever, and others going to back up. I'm not. No,
it's Thanksgiving. I won't be back.
I'm just gone. Well, do you have someone in your office? Oh no, I'm just going to make everyone wait. Now, maybe the seller is going to say, yeah, I don't think so, buddy. But I mean, it is amazing when I'm like, we're waiting for the third party. Like, hire someone else. But so once I've got that firmness, then I say, okay, we're going to lock the rate through this November 30th, let's say. And I explain in advance if everyone is going to move, and I try and give a little more leeway than that, like in New York with the lock.
Yeah.
Give
45 days.
Yeah. But rates can change. But I say, and I prep them in advance to say, if you need to extend, these will be your extension costs. So they in advance know.
No, yeah.
You can't. These will be. We're not having a
surprise.
There's
no surprises.
We're not having a surprise. It's written down. You might, we might get there. Might be disappointed. But there was not a surprise. We also know that you have the funds for that. But extension costs aren't very expensive. I quoted someone yesterday. It's $381 for something. But it's $381.
Yeah.
Right? You were gonna use to do something with your home.
Right.
So we got it. Check. But so, do you want to lock now? Do you want to wait? What do you want to do? But there's more of a communication path that's needed too. Also, okay, now we have the insurance buyer.
Yeah, then that would change insurance too.
And we on our end, so we all bound coverage for November 30th. LoanDepot on anything now you moved it to whatever day, we call back and of course change it to the correct date. But there are companies I know because I've seen them where they don't call and change it. Now, by the way, you just paid insurance for a home you don't own for 15 days, a month, whatever.
Yeah.
Now, it was a day, whatever. But come on, guys, I had one for a month, and we changed it. And it was so funny because they were like, "Well, we don't really." I'm like, "No, we do care. You don't need to pay insurance for a home, that you didn't know."
And you can have everything teed up and ready to go,
right?
Without having to do it. But then the mortgage companies require this doc and that doc and this doc and that doc.
Right, and that's why we need it in advance. So we say sometimes even if you say we're not sure, I have it done a few days early, so we can clear a loan and move on with the process. In the back end, we have a whole team that will give you a call to get the absolute correct date. You're also following up, but my team, you would be someone who would follow up, not every like a Geico or whoever does not. They just take the date and don't follow.
Get me started.
Our team totally follows up and we'll change a date to the actual date. If it's a day, we might, let it slide.
Within a couple, 2 or 3 days.
2 or 3 days. We're not, but 2 weeks, a month, like my time.
Yeah, $4,000 divided by 12. Hello, that's a little more.
Yeah, again, 3 days later,
exactly.
we're not going to really have
that's
a debate.
That's grocery money at this point.
If it was you closed on Tuesday, not Friday, we're not going to get crazy. But if it's longer than that, we actually
we want to work together to make it. Listen, our best interest is to make you, the client, happy, right?
But not everyone thinks that way, though. That's the thing.
Yeah,
But you're right. Your team is important. I think that makes a difference. It's your team that you create. You have Jennifer helps you with the houses, and I find that the houses that take the recommendations from the real estate brokers, get rid of the tchotchke stuff, just hide it, right? If there's an old roof, it makes it much more difficult for insurance. Maybe you don't want to make that investment, but it's going to be worth it because it's going to pay dividends in the sales price of what's going on.
Yes.
Look at what's going on. Trim some of the hedges. Perhaps you have overhanging trees. That will make a difference. It will present the house. I'm making things up, Jennifer.
I have a question. Actually,
you could get $5,000 more for your house by spending, $1,000 on tree trimming. Well, that sounded like that's a
okay. I have a 2-part question, and this is actually going on So I had a client who bought a house, and water started flowing out of the driveway. She thought it was just with all the rain. And the neighbor's like, hey, you may have like a burst pipe, call this. So she spent a whole week. Aquarium came out, this came out, called the insurance says, call this guy, have them dig up, find out what the problem, you may have a sump pump, because the people who owned the previous home was old, so they don't know what's going on. Turns out that the water is coming from the next door neighbor. Sump pump.
Wow.
So the neighbor who called hi neighbor, thank you for
so this is the house. This is her house. Apparently the sump pump here goes this way and goes. Why, I don't know.
Went right across an easement for their yard.
Yeah.
Oh, it's
which
just
they didn't know.
Right. It's just
which they didn't know.
It's
the power company didn't catch that.
Wow.
So this is why I bring this up. Who's responsible for that?
Good question.
Because the owner of the sump pump, hey, not my fault. That's your property. I'm not going to pay a dime. The owner of the house, sorry, your insurance, the cost of the problem is not from your house. We're not paying a dime either.
Can I just ask, it was flowing into her house or just down the driveway?
Down the driveway,
okay, so
but the driveway now.
It's not coming in her house.
Oh, thank God.
I mean,
but we're talking about a $50,000 fix.
So, interestingly enough, I don't know all the answers to that, but I will tell you one thing along these lines, which you want to pay attention to. So some policies have coverage for it, some do not. But it's called, I want to say buried utility lines. I could be getting that wrong. But it's the gas and the water that generally goes from the street, under your yard, to the house.
Yep.
That is not a covered item unless you get an endorsement for it, either on the policy or you can do an aquarium or something like that. But if you don't have that coverage, that digging out that line, the water line that's broken, it's all on you.
And you have to know what's under your house to start with.
Well, but this is a thing.
Which a lot of times, I have one that I thought it was somehow abandoned. It turned out, everything turned out okay, but there was this thing at one point, why is my floor cracking? But I was not going through insurance. I was just because I was redoing stuff in the basement. Why is there this crack? No, there wasn't water. Why is there a crack? But then what was this pipe? Because it was not my pipe. So I was like, is this a town pipe?
Well,
as we were doing, and then it turned out it was some abandoned something that we were able to remove with that. But again, this just when I'm renovating something. But it's what is this?
Interestingly enough, if it was aquarium, they would have fixed it.
Well, yes. If it is,
because if it was a water main pipe,
Well, yes,
Like,
water main, they'll do
right,
it.
because at first
they
we were like,
will take care of it.
because in my thing we were first like, wait, well, like before we started doing anything, we had all the mapping that was like, this appears nowhere on any mapping of, where they mark where everything is. So it's like, what is this?
Right.
So
height.
So bottom line, the reason I bring that up is that when you purchase a home, you need to know what you're buying. Well, the thing is, like, that's been there. They don't even know that it existed, first of all. And this is why getting all the right insurance makes a big difference, because like a tree falling on your property that's from your neighbor is like, it's so complicated. It's like, who pays for what? But that's the thing, is like, if you have a good insurance person, like I have asked Suzanne so many questions, and this is what I love about her. She would say, no, you know what, your policy is good, stay with that one. Mm-hmm. Most agents will not do that. So that's why I love this too. Amazing.
Also, guys, don't be scared. Like if you're a home buyer and
ask
you're suddenly
questions.
No, but if you're suddenly thinking, do I have to become like an expert on pipe? These are sort of random stories.
Oh yeah.
You just have to be working with a realtor. You are given, just so you know, you are given, and the listings show like topography, all this other stuff that now you don't have to suddenly say, what is this topographical map or this, GIS map and all these things with all these things. This is, your real estate agent knows how to read these quickly. They're not like insuring you against something, but could be like, things you need to know. You're sharing a septic system, or your septic system is only for 3 bedrooms, not 4. Now, so they are looking at that. You're not like a liable, but you don't need to become an expert and be like, what's under the house? Well, there shouldn't be anything under the house, realistically.
And it's good to have a good attorney, because encroachment changes the value of your home. One of my first clients bought a house in Old Greenwich. It's actually known in Old Greenwich, lot size is 0.16. And the next door neighbor was an attorney, and like those years started encroaching and encroaching and encroaching. By the time they wanted to sell their house, they never knew that the next door neighbor has been encroaching on their property, and out-of-town attorney didn't catch that. Oof. So now her property, 0.16, became a lot less than what it should be, and now they have to get an easement from, it's like...
Or you have to make your neighbor, who you'd like to be neighborly, if it's not really bothering you, but you'd say, neighbor, you have to remove whatever you encroach. No, but I mean, technically you could say, okay, let's say that a shed, okay, but they permanently fixed it and it was encroaching. But now you wanted to build something, and because of this, you have to then make them remove it. So
so it's always to have a good team. And a very good team in your team. So before anything else, I'm gonna have you guys say whatever you want. Another reason I'm actually very excited to have these two amazing ladies is that these are two successful women in my life, which I am very blessed to know them, and I hope they could be inspiration to anyone out there, that if you work hard, you could be your own boss. You could be very successful as long as you love what you do and you're dedicated. So I'm gonna let Suzanne say whatever you want to tell anyone, but
first of all, thanks for the kind words. And we feel the same
about you. I love you guys. You're not, I'm so excited you guys said yes.
No, really feel the same about you. You do an incredible job, work for your clients nicely, and you work hard for them. And I think you said it right. When you love what you do, you don't really work. I mean, that's part of the game. I mean, we're all in this to win together. If I do right by you, you're going to get the house that you want. You're going to refer your friends and family. And that's exactly what our intent is to do, to help you. As I said, I translate, help you understand how it fits and works for you. Love to hear from anybody. You can get a hold of me at Malloy Insurance. We're on the World Wide Web. And phone number would be 203-351-9898. So more than happy to have you reach out. Any questions? And as Jennifer said, the worst thing you find out is what you have is great. And that's how I look at it, right?
Yes.
So it's a good way to do it. We love working with mortgage brokers. I think that's going to be probably your first line of defense. And then, but I do highly recommend check out your insurance thing early in the process, not in the late in the process, because as you know, it can make a big difference. You've been through it lots and lots.
Yeah,
so.
I advocate for that early.
And to add on to that, if you have lived in your home for a while, just like on the one rainy day, just pull out your insurance, because you may be paying not $45,000. You may be paying for something that you don't need, or you actually need certain insurance that you don't realize that you need something now.
You don't have. That's correct.
Right? Because like right now, have you seen there's anything that's being added or something that we should add that normally wouldn't be in our insurance? Like,
actually, more on the commercial side, believe it or not, but cyber. Cyber insurance, real estate agents. One of our cases that I was talking about when I was speaking not long ago was actually a real estate broker.
wow.
And it was locked down their phone, and the ransomware was about $86,000.
Wow.
And so, just to keep that in mind, there's lots of bells and whistles with certain companies, not so much with others. The biggest thing I would say is you want to make sure your replacement cost on the dwelling and on your contents. And I cannot emphasize enough the importance of liability.
That, yes, the liability insurance is big.
Big, a liability, if you buy a home, you know it's always going to be worth X, Y, or Z. The house, the structure itself, okay? $1 million, you buy it for $2 million, but the house to rebuild is $1 million. You know that's going to be the cap of what you're dealing with. Maybe it's only $500,000 to rebuild. Doesn't matter the number. But a lawsuit,
Yes.
we have no idea what they're asking for. So just keep that in mind as you're going through coverages, and I'm happy to review that with you. But
thank you, both of you. You know Jennifer.
Yeah.
Love you. She and I always have a good time together. What can I say? The first step when you were thinking about buying a home, you're likely on Zillow or Redfin or Realtor.com or something. Don't be scared to call me. Pick up the phone. This is a no judgment zone. You can tell me whatever. And a lot of times you don't even need to tell me what you're telling me, but like people don't know. If you just call me and say, what's a rate? I had someone who did this and said, I couldn't tell you. I don't know what state you're buying in. I don't know what purchase price. I don't know what you're putting down. I mean, I'm hoping your credit's good, but I need a little bit of information. And take the leap of faith that, again, well, be it me or someone else, hopefully, we're not judging. We're here to solve for yes and get you in a home at the best rate and have all of your friends and family refer to us, and we know you for life. I want clients for life. So it is sometimes hard because you're exposing yourself. Hi, Jamie, and suddenly you're telling me about your income, your assets. Maybe there was something that was bruised on your credit. This is fine. Or you think you don't make enough money because you're thinking of your friend who makes more than you. I'm not thinking of your friend who makes more than you. I'm thinking of what you're telling me to, again, solve to get you in the home that you want or based on what your spending limit or habits are. Simple as that. And I try and make it sound as simple as that because it enables you to, again, pick up the phone. I need 15 minutes. You can also email me, of course.
Yeah.
You mentioned something about the bruised credit.
Yeah.
If you get involved early enough in the process, you can work on that.
Yesterday, or 2 days ago, I had someone who honestly has a very low credit score that we can't lend on.
What is considered low?
Well,
500?
we can lend down to 580. That would be an FHA loan, and you'd have to put 10% down.
See, it's interesting. The reason I had to ask that, some people like, I have a very low credit score. I can't buy a home. Like, what's your credit score? 600.
No. So when you're under 680, there's likely either you have limited credit, you're a young person, or you just came here from another country, so you don't have a lot of credit. So might be under 680. When you're under 660, usually there's something that, like, some type of something that went on. 640, 620, you're bruised. Under 620 for sure. You've got maybe something going. Again, not brand new credit, but something's maybe going on. So when you're under 620, that's where you're going to see Fannie Mae and Freddie Mac will lend to 620. When you're under 620, you get into an FHA bucket down to 580. Then you're going to have to put more down if you're at 580. So I had someone in the fours.
Wow.
That's going to take a while to fix because you need to clean up some collection accounts and get a couple credit cards. I don't care if it's a $200 limit that you're paying on a regular basis for about 2 years. And that's fine. And I have credit sources who I have one that's a not-for-profit, not me, Jamie, as in to refer to you, who can help you understand and build, and it will be a 2-year process.
But at least there's something to look forward to.
Yeah, there's something.
Is it like
and
giving
by the way,
yeah.
her husband was at 620, so I said if we can just get your husband, your budget will be lower because we can't use your income. But if you can lower your budget, we can use your husband.
Yeah.
So again, no judgment. This is just factual.
You never know unless you ask.
It's factual, and now there's a plan of action.
Yes.
I just can't emphasize enough to get early in the game. I really think
Yeah.
so. Talk to the realtor. You can clean up your house, get it organized,
Yeah.
present it the best possible life. Talk to the mortgage broker. If there is things that are simple fixes or longer term fixes, you know what you're getting into.
Yeah.
If you get involved and ask questions about the insurance, are there things behind the scenes that you didn't know?
Yes.
Maybe you're in an area that's going to be at higher risk. You're right on the water. You're in a fire area, whatever. But know what the things are that you're looking at
So
in
you'll be
advance.
prepared.
It doesn't mean,
Yeah.
I do say all my clients, when you've signed the contract, what are you gonna do? Your down payment, if it's, you heard me earlier, if it's not in cash, liquidate it to cash, because I don't want fluctuations. Please call an insurance agent, I give names, I say, please call them now, so that again, you know what this number is. And then then also when I'm telling you what the estimated payment is, obviously I'm putting the rate, and I know what your tax is, then I'm not estimating. Is it $400 a month, $300 a month, $200? Is it $500? So when I'm telling you what your monthly payment is, you're like, it's $300 more. Why?
Yeah. No surprises.
Yeah.
Well, thank you. I have to. Oh, there goes John. What is the best way to go?
I love this. I'm really
Yeah.
Love it.
So I want to say thank you, Jamie, for my cake. I thought like, wait, it's not my birthday. It's the 100th episode. Thank you, all of you. This would not be possible if not for all the viewers. I love the hearts. I still get like, oh my gosh, I saw your episode. And one thing I'll never forget, when a mother calls me, did you tell my son to come home and like move back home? He said, Jennifer said to move back home to save money. So like, yeah, guilty as charged. And then that same mother calls me a month later. Oh, thank you so much. I love having my son because things get fixed in my house now.
Yeah.
And then we will have like Jamie.
Then we'll put
like,
them out after
Exactly.
after the things are fixed. Then we'll
Anyway, thank you so much.
Yay. Best wishes, Jennifer.
Thanks for
Thank you so much.
for doing
Thank
this
you.
amazing 100
See you guys
episodes.
next week.
Yay.
Bye.
That was fun.